Bitcoin, BTC, is rapidly headed for oversold territory despite still trading above $40,000, the latest data shows. As noted by analyst Matthew Hyland on January 14, Bitcoin's Relative Strength Index, RSI, hit its lowest levels since September this week. BTC price RSI echoes $25,000 levels. BTC price performance suffered a 15% drop after the launch of the United States' first spot Bitcoin exchange-traded funds, ETFs, and has so far struggled to bounce back. As traders warn of the risk of further downside, RSI is showing that a reversal may already be near. On daily timeframes, the classic momentum oscillator dipped to 42.7 or 100 on January 14, lower than at any point in the last 4 months, as confirmed by data from Cointelegraph Markets Pro and TradingView. At the time, BTCUSD traded at around $25,000. Cointelegraph. The move was not lost on Hyland, who uploaded a chart to X, formerly Twitter, which suggested a hidden bearish divergence playing out, RSI making lower lows while Bitcoin itself makes higher lows. #BTC daily RSI lower than October lows and at lowest levels since September. pic.twitter.com/LWPNKRHKR. Daily RSI is nonetheless not strictly indicative of an imminent return to form for BTC price strength. Having sunk below the midpoint of 50 or 100, the metric's next major test could be the barrier to its oversold area at 30 or 100. I would like to see the daily RSI go down to oversold for Bitcoin, popular trader and social media commentator Seth wrote in part of a recent X post, Cointelegraph. On hourly timeframes, RSI pierced the 30 or 100 line in the sand twice this week, both times recovering and making higher lows in the process. Bollinger Bands reflect return of volatility. Last week, meanwhile, fellow trader Gel noted that by contrast, a trip back to overbought levels above 70 can often mark the start of the steepest upside on BTCUSD. Related, BTC speculators dump $5 billion, 5 things to know in Bitcoin this week. When #Bitcoin's RSI enters the overbought territory, the real fun happens. Just look at what happened in the past, pic.twitter.com/IADXYOE3NU. As Cointelegraph reported late last month, RSI is just one of several key metrics currently on the radar of market participants. Another is the Bollinger Bands volatility indicator, the daily chart for which now shows BTCUSD back in volatile mode after a period of constriction. Current prices mark a trip to near the bottom of the expanding channel, which has likewise not been truly challenged since mid-September. Cointelegraph. This article does not contain investment advice or recommendations. Every investment and trading move involves risk, and readers should conduct their own research when making a decision. Phantom FTM slashed validator requirements for running a self-staking node on the network by 90%, stating the move will help buffer network security, the developers said on Monday. The staking requirement was cut to 50,000 FTM, currently worth just under $20,000 at current prices, from 500,000 FTM. Validators are entities that lock a certain amount of tokens to process network transactions and maintain network security. On Phantom, validators confirm transactions on their own and bundle them to share with other validators, as opposed to all validators confirming the same transactions, like on Ethereum. A relatively lower cost of running a validator node can make the network more distributed, thus improving network security. By having more validators, a network makes it increasingly challenging for malicious actors to launch an attack, developers said in an X post early Tuesday. FTM prices remain unchanged as of early European trading hours, CoinGecko data shows. Hashkey Group, a prominent digital asset financial services group in Asia, has successfully concluded a Series A financing round that garnered nearly $100 million. This fundraising round brings the pre-money valuation of Hashkey to over $1.2 billion. The Series A financing round saw active participation from existing shareholders. Moreover, Hashkey attracted new investors in the form of institutional investors, prominent Web3 institutions, and strategic partners. The capital raised through this financing round will play a pivotal role in strengthening Hashkey's Web3 ecosystem. It will also accelerate the diversification of its licensed business activities in Hong Kong, and support the group's global development endeavors in compliance and innovation, according to the statement. In 2023, Hashkey made significant strides in the regulatory landscape of Hong Kong's virtual asset industry. Hashkey Exchange, a subsidiary of Hashkey Group, introduced the first licensed virtual asset exchange app in Hong Kong. This app has proven to be a hit among customers, providing them with secure and convenient virtual asset trading services. Within just 4 months of its launch, The app garnered over 155,000 registered users and achieved a daily average trading volume of $630 million over the past month. Hashkey Exchange has also forged strategic partnerships with over 10 brokerage firms and 6 publicly listed companies. Alongside its virtual asset exchange, its core businesses include Hashkey Capital, a global asset manager, Hashkey Cloud, a provider of blockchain node validation services, Hashkey Tokenization, a provider of tokenization services, and Hashkey NFT, which is engaged in Web3 PFP incubation. Bankrupt crypto lender Celsius has moved $125 million worth of ETH to crypto exchanges, as part of the embattled platform's initiative to repay creditors. The move by Celsius comes after FTX and Alameda Research resumed the transfer of funds earlier this month. Celsius begins transfer of ETH. Between the 8th and 12th of January, Celsius moved $95.5 million worth of ETH to Coinbase, and $29.7 million worth of ETH to FalconX. These transfers were also reported by Arkham Intelligence. Despite these large transfers, Celsius still holds over 550,000 ETH, which is valued at roughly $1.36 billion. Looks like Celsius took the opportunity to unload greater than $125 million of ETH over ETF week. In the past week, they've deposited $95.5 million to Coinbase and sent $29.73 million to FalconX. They still have $1.4 billion, 540k ETH, remaining. The development comes just 10 days after the firm announced it was unstaking around 206,300 ETH, worth around $407 million, as it geared up to prepare for timely distribution to its creditors. Celsius claimed the unstaked ETH would be used to pay for costs that were incurred through its restructuring process as it prepares to repay its creditors. The firm has been embroiled in bankruptcy proceedings since it filed for Chapter 11 bankruptcy in July 2022. And cited the need to guarantee sufficient liquidity for any potential asset distribution. Celsius attempts to recover funds. Celsius recently proposed a bold move to recover funds, involving users who cashed out over $100,000 in the 90 days leading up to the firm's bankruptcy declaration. Through its attorneys, Kirkland and Ellis, Celsius demanded that these users resolve their outstanding liability or face litigation. The firm deemed pre-bankruptcy withdrawals as avoidance actions that were eligible to be pursued in court. The notice requires affected users to return 27.5% of their withdrawn amount by the 31st of January, 2024 or risk the prospect of clawback. The move was part of Celsius' plan to repay creditors in line with the firm's restructuring agreement, and potentially allow users with trapped assets to receive their due. However, the success and influence of such a clawback initiative still need to be determined. If such a measure is successful, it could set a precedent and could see other struggling platforms adopt similar methods to recover funds. Other firms moving funds. Celsius was not the only firm to move its crypto holdings to centralized exchanges. On the 14th of January, bankrupt cryptocurrency exchange FTX and its defunct trading arm Alameda Research transferred around $28 million worth of crypto to centralized exchanges. These transfers were confirmed by blockchain analytics firm Spot On Chain. The transfers made by the firms included $8 million worth of ETH, $18.7 million worth of wrapped Bitcoin, and $1 million worth of Pendle to Coinbase and Binance. FTX and Alameda Research declared bankruptcy in November 2022, with FTX looking to raise funds to repay its creditors. So far, administrators at FTX have reclaimed around $7 billion in assets, which includes $3.4 billion in crypto.